This program is specifically designed to be viewed by adults and may be unsuitable for children under the age 17. Viewer discretion advised.
The materials provided in this presentation and any comments or information provided by the presenter are for educational purposes only, and nothing conveyed or provided should be considered legal, accounting, or tax advice. Please contact your own attorney, accountant, or tax professional with any specific questions you have related to the information provided that are legal, accounting, or tax nature. All copyrights and trademarks of images belong to their respective intellectual property owners and are used under fair use for educational purposes.
Banking Alternative Solutions, presented by Nathaniel Omar.
Hello, ladies and gentlemen. Today's meeting agenda includes 6 items for discussion. Number 1, a brief introduction of the presenter. Number 2, a quick layout of Community 2612 plan and purpose. Number 3, we will cover the value of knowing how to generate compound interest on bank deposits. Number 4, we will provide insight on the rule guiding compound interest. Number 5, we will discuss commercial bank deposits, yields, and costs. Number 6, we will cover bank product alternatives. Number 7, we will finish with closing remarks and open the meeting to the audience to answer any questions, comments, or concerns. With that said, let's get started. For more than 100 years, communities of color have been left behind economically because of a rigged economic system being perpetuated by the United States commercial banking system. People, we have to rethink and reevaluate our relationships with commercial banks and take action by removing our deposits from this rigged system. Let me tell you a little bit about it. Our individual deposits provide the banks access to capital to leverage in open markets, but many people of color can't go into these same banks to get home loans, auto loans, education loans, business loans, and even credit cards for that matter. This is a fundamental problem in our commercial banking system, especially when those same banking systems are using your deposits and you don't get anything in return for those deposits. Community 2612 organizational sole purpose is to create a Main Street lending facility that provide access to capital to all the individual families in our communities, regardless of credit and income. Our plan is to help individuals and families form small businesses that are well capitalized using a community-based lending approach to initiate a large-scale economic transfer and transformation of wealth from these few commercial banks to the many people of color. We are a large collective group of more than 100 million people. This can be done and implemented by instituting a fair and inclusive market-based system that does not redline and discriminate against marginalized groups of people. We have the power when we work together as a collective group. This is more than just about moving money from the depositors and deposit institutions. This is about moving a group of people in a nation as a collective group. Listen, we have to collectively and strategically send a message to the commercial banking system. They have too much power and influence over community economics. According to the Federal Reserve, which is the central bank of the United States, 5,116 FDIC insured banks are holding $20.2 trillion in deposits, and 19 trillion is held by commercial banks. But guess what? Here's the scary part. 10 banks are the depository holding institutions for more than 14 trillion in deposits. Let that sink in your head. 10 banks are the depository holding institution for more than $14 trillion in deposits. That's less than 1% of the depository institutions. And they are holding 70% of the money in the United States. That's crazy. We got to do something about this like now before there's another major economic event that happens in the United States. I'm not trying to be an alarmist. I just think that there's a problem when less than 1% are holding 70% of the money of a nation. I believe that this is a serious security risk for all people. There's no way in the world 1% should be holding 70% of all of the money of a nation. Nathan Mayer Rothschild said this way back in the early 1800s in England. I care not what puppet is placed on the throne of England to rule the empire on which the sun never sets. The man who controls Britain's money supply controls the British Empire. And guess what? I, Nathan Mayer Rothschild, control the British money supply. Let me give you some context to this. Nathan Mayer Rothschild was a German Jew who was a banker, businessman, and financier, and at the time, he was the wealthiest man on earth, and he was the richest of all the Rothschilds. Listen, people, this is not alarmist. We have a major problem that's percolating right now, and nobody is watching and nobody is moving to get themselves in a position where their families and communities will not be devastated by those who are holding less than 1%. Follow me. Less than 1% of the depository institutions are holding 70% of the nation's money. People, we have a problem. Somehow, over time, millions of depositors, including myself, got duped into believing that commercial banks were the safe and most secure place to store money. Is this true? To some, yes. To others that know how money is engineered and compounded, the answer is no. Other than money printing, money is grown through a rule. Albert Einstein discovered the rule of 72, which dictates how long it takes to double your money with any asset. Cash is king. How much is your cash worth in your bank account products, such as checking accounts, savings, money markets, certificates of deposits? How much is that money earning over time? If those accounts are earning less than 1% or 0% on an annual basis. In finance and banking, the rule of 72, the rule of 70, and the rule of 69.3 are just basically standard methods for estimating investment doubling time. The rules apply to exponential growth and are used for calculating compound interest versus simple interest calculations. Time and interest rate are extremely important to an asset's accumulation value. When you have an asset that is earning 1 to 0% a year in annual interest rate, automatically you know it's going to take a longer time for that money to double. For example, 72 divided by 1 equals 72 years for that investment to double. Most bank products in terms of checking accounts, savings accounts, money markets, and CDs are earning less than 1% annually in interest rate. Does that sound like a fair deal to you? Even Warren Buffett, the fourth richest man in the world, admits that his wealth has come from compound interest. Take a look. He says, "My wealth has come from a combination of living in America, some lucky genes, and compound interest." How many bank depositors are receiving good interest rates on their deposits that they're depositing at these depository institutions? I wonder. According to the Federal Depository Insurance Company weekly national interest rates, the average interest rate for a checking account is 0.04% of 1%. Savings accounts are 0.06% of 1%. Money markets pay 0.08% of 1% annually, and 1-year CDs pay 0.26% of 1%. These products aren't even paying 1% annually. And meanwhile, the bank is issuing credit cards at 15 to 18% using your deposits. So imagine what the rule of 72 says. 72 over 18%, which means that every 4 years, the bank doubles its money on its credit card portfolio using our deposits. This has to change. After looking into the massive manipulation by banks, I realized the elite 1% played a dirty trick on us. It's called the reiteration effect. The reiteration effect is the tendency to believe false information to be true after repeated exposure. Somehow the majority of us believed the safe and secure message was true when it was being peddled by the elite, even though the information was easily proven to be false. The banks are paying less than 1% on bank products, and they are using our deposits to enrich themselves. In closing, how do we change this massive raping and molesting of the deposits being perpetuated by the banker? Number one, first we have to understand the rule of compound interest and apply it. Number two, we have to silently move our money from these 10 depository institutions that are holding 70% of our money in the United States. And three, we have to work our deposits in the same manner as the banks. The banks pool all our money together and they leave the designated required reserve there, and the rest they use to enrich themselves and their investors. Let's enrich our families and our communities. Thank you for your time, and I hope that you invite your family and friends to hear this message and take action. Signing off, Nathaniel Omar.
For attending this short informational meeting. We would be honored if you joined our community today. To join our community, we need to get you registered. Please text 520-352-9977. Again, please text 520-352-9977. Include in the text your first and last name and the name of the person who referred you. And please spread the message to your family and friends. And I leave you by saying, thank you and have a wonderful day from Community 2612.